Eicher Motors, and even JSW and Tata Steel, they're looking a little bit choppy in today's trade. But time to move right on then, and it's been a pretty healthy quarter when it comes to Tata Power. Let's understand which businesses have led that growth, what is the outlook in terms of monetizing their mines, and lots more with Praveer Sinha. He's the CEO and MD at Tata Power. Thank you so much for taking time out and joining in. To begin with, Mr. Sinha, let's talk about the vertical that led your profitability. That's been the mining business. Walk us through what really has led to this growth and what your projections are.
Good morning. Thank you for having me on the show. I think you need to look at this quarter performance as a very consistent performance of Tata Power. This is the 13th consecutive quarter in which we have shown growth in our PAT. Also, in this year, if you see, our performance has been very consistent. Our PAT in this quarter has grown by 90%, but so also if you see YTD in last 3 quarters put together, it's about 90%. So I think when we look at Tata Power, we need to see from the lens that how consistently it is performing, and the growth drivers, of course, has been all our businesses. Our renewable businesses have done very well. Our existing generation business have done very well. All our generating plants, including the Mundra plant, has done well. And fortunately, we got a order under which the CRC has allowed pass-through of cost of coal for Mundra, and that has also helped us in making it cost reflective. Similarly, our distribution business, Odisha distribution, and our existing distributions continue to perform well. So I think consistency in performance is now becoming a hallmark of Tata Power. And when we look at Tata Power, how in future it will be, it will have growth in renewable, it will have growth in our distribution business, it will have growth in new businesses like EV charging and some of the energy management services that we would be doing, and the consistent performance from our existing cash cows, which is our existing coal and hydro business. And we do expect that this trend will continue in future too.
Mr. Sinha, given that profitability improved in the Indonesian coal business, especially, and I was looking at the numbers, almost 53.5% on a year-on-year basis. Clearly, it's the high coal prices also which led to that. Going forward,
Yeah,
how do you anticipate coal prices to move?
I agree with you that Indonesian coal mines have done very well, and we expect the coal prices, which went up to $300 in HPA, will come down in next 1 year to 18 months. So we expect it to come down to a level of about 200 to $220. So I think it will stabilize, but it is definitely not coming down to $100, which it used to be there before COVID. So I think the impact of the war and COVID and the additional demand of coal, which has been seen globally, including in China and India, I think will continue to ensure that the Indonesian mine is able to generate good amount of profit.
Your renewable energy capacity also increased to 6.1 gigawatt in the third quarter, with an installed capacity of 3.9 as well as 2.2 under various stages of implementation, as I understand it. Tell us a little bit about the timeline of the commissioning of the 2.2 gigawatt capacity, and when will it really come on board?
So all of them will get commissioned in next 3 months to next 12 to 15 months. As you would be aware that some of these projects got delayed because of the very high commodity prices in last 1 year. Now that the prices have come down in at least in last 3 to 4 months, we expect to complete these projects in the next financial year, and very little of it will spill over to 25. So I think the benefit of all these new generation capacities will start, the fully impact one will start seeing from FY25 onwards.
FY25 onwards is when we'll see the impact of the renewable capacity. But I wanted to come back to the point that you made in your first answer regarding Mundra power plant. While You did say that the resolution is expected soon, but for now, the Section 11 hasn't been extended. Plus, the supplementary PPA with GUVNL hasn't been signed as yet. When do you expect it to be signed, and what will be the impact on profitability and under recoveries when it does happen?
So I think the CRC order is a good benchmark for us to go ahead and sign the supplementary PPA with the procurers, including Gujarat. And we are discussing with them, and hopefully this should get signed within this quarter. We expect that this will become the new benchmark for how Mundra tariff will be determined. Of course, we are expecting that there will be huge increase in consumption in the coming summer months. And while the Section 11 order might come by the end of this month, we expect that our resolution will happen with Gujarat and the other procurers before that.
We're expecting Section 11 order maybe in a month's time, and maybe the supplementary PPA in this quarter. Let's see whether that happens or not. But Mr. Sinha, Odisha Discom has also seen quite a bit of improvement when it comes to the AT&C losses, but they're still high at 26% versus your own average, what we have seen in Delhi and other regions as well. Could you talk to us about what the AT&C losses could be over the next 12 months? Because we do have an idea of the long-term target, but immediately for the 12 months. And is there any other discom that is coming up for privatization that you'd like to bid for?
So, Odisha Discom has been a great success because from a loss of about 35-36% when we took over nearly 2 years back, it has come to a level of about 20 to 22%, which has been a substantial improvement than what it was earlier. A lot of data cleaning has been done and a lot of metering has been done where the meters were not working. So I think the whole impact of it we will start seeing in the next financial year. FY24 should be a great year for Odisha Discom, and we do expect that in all the discoms the losses will come down much lower than 20%, and we have a trajectory to bring down to nearly 10% in next 5 to 7 years. So I think we are very aggressive in terms of improving the performance of Odisha Discom, and the last 2 years trend shows that we can make a substantial difference in reduction of losses as also in improving the quality of service that we provide to the consumers.
Okay. Now, I just wanted to understand that while your net debt has remained stable, the cost of borrowings has increased on a year-on-year basis to 7.2% versus 6.4%. So, how are you expecting your net debt and your cost of borrowings to shape up?
So the cost of borrowing has increased, but if you see compared to other peers and others in the market, it's much lesser than all of them. And we continue to have a very close watch to ensure that our debt numbers per se remains low, plus our working capital improves, whereby we are able to generate enough cash in the business for the new capex. So I think we are very focused that all the money which is there in the market we should collect. There has been very good trend in last few months where consequent to Government of India notification and putting the details on property portal, we have been able to get a lot of money from the discoms which were earlier stuck up, and our collection cycle has improved tremendously. So I think you will see a lot of improvement in our collection cycle in the future quarters, and we do expect that we'll be able to increase our capex, but still not increase to that extent the debt of the company.
Lastly, the street was expecting a lot of dole-outs for solar manufacturing in this time's budget, but there wasn't anything specific that came out. What does it do to your plans of the extended module and cell capacity?
So our work on the new plant is progressing very well. The construction activity is at full swing and all the equipments have been ordered. We expect the rollout of the first of the modules from this plant by this year, August, September, and the cell by December. So I think we are very much on track. The government had, of course, announced the PLI scheme last year in the budget. The rollout of that has still not happened, but notwithstanding that, we are going ahead with the implementation of the project. And as and when the PLI scheme gets implemented, we expect that some of the benefit will be received by us also.
Okay, good to hear that. Mr. Sinha, as always, great having you today on ET Now and chatting with us.
Thank you very much.
Okay, that's the word coming in from Tata Power, extremely bullish and about the future prospects. Tata Power now holding up 1.6% higher, 208 is where the stock is. We'll take a very quick break. The market, of course, getting a little bit volatile. Let me just refresh the rates and show you where the Nifty is currently at, because it continues to be quiet, but we're slowly inching lower, although seen a bit of a recovery from that previous low.